Welcome back to our 24th video in our QuikStrike series of videos for the month of February. Today we are going to take a cursory look at a bunch of different sections to show you some of the secrets of the interest rate products. So just things that we may not have covered in some of the other videos on specific pages that are additions that appear on the interest rate products that you won't necessarily see on some of the, what I've been calling regular products, right? So we're going to get started with that in a minute, but first we want to remind you of where we landed when we log into QuikStrike for the first time. Again, we're on the market dashboard, the product overview. That's the first place that we land on our favorite product group and product. One thing you won't necessarily see in some of the other products is this extra menu here on the product summary. In this case, Eurodollars, we split this up into multiple pieces of the yield curve. So you're seeing the first year of the regular Eurodollar calendar contracts, then you see 1 year of the mids, which is all that exists for each one, et cetera, through the second, third, fourth, and fifth year mid curves. Okay, so that's one kind of special feature that is part of the interest rate products. As far as that goes, the other thing we'll take a look at is settlement prices, and I think we covered this, but it's worth repeating. On the interest rate products, we do have two volatility values that we show in the settlement pages. For the short-term interest rates, Eurodollars, we are seeing a volatility, and this is essentially a basis point volatility. So that's the number that you're seeing here. It's the Bachelier model, but this is a basis point volatility. So those will match your basis point volatility calculations, which can be had by using the Black-Scholes volatility or some other American model volatility. So we show these because there are systems that use both of them. This is our primary volatility, but we know that people like to think of volatility in the short-term interest rates in this fashion as well. So we'll notice that on the 10-year, there is a volatility, and this is a Black-Scholes or whatever American model you might be using to calculate your prices and your implieds. So this is the price volatility of the treasury, and then we show you a secondary or basis point volatility. So the interest rate products, generally speaking, there's some volatility model, but people are going to talk about things in basis point volatility terms because it lets them compare volatilities more easily across different when the underlying is at different parts of the yield curve, because it's a normalized comparison as opposed to the price vol in the treasury or the Black-Scholes vol in the Eurodollars. Those aren't as easily comparable as the futures move in the underlying. So that's why these are present. So that's our second little feature that exists there for the interest rate products. We're not gonna look into the intraday activity. We'll jump over into the futures information. And we do have some things here. We're still on the 10-year now. We're going to jump back to the Eurodollars to show a couple things as well. In the 10-year, we do have these cheapest to deliver baskets. We may or may not have covered this in our futures info video, but here what we have is every evening we get a drop that lets us determine what is the cheapest to deliver basket, and then from there we calculate the current yield of the settlement on the future, and then the current DV01 or dollar value of a basis point. Okay, and this cheapest to deliver is based on the smallest implied repo rate, or the largest implied repo rate here. My negatives got me confused. So this is the one that we chose, and that's colored in blue. Okay, but we do this for any contract that has open interest. So in this case, the 10-year has open interest in the March and the June contract. And I believe, if I'm not mistaken, the 30-year might have 3 because there's a small amount of open interest in the September contract. So take a good look at the cheapest to deliver basket. You'll always be able to get your dollar value of an 01. And this is very important if you're calculating your own basis point volatility. And then this is also used so you can do some quick and dirty calculations for determining yields on strikes, which we will get to as well as we look at some of the other interest rate secrets. And if I jump over to the Eurodollars, this was also over in the 10-year, but this is some more interest rate related information. So we basically have a mini Fed effective rate page. So it's gonna fill in where the Fed funds rate is right now, and then it's going. So these days haven't traded yet, obviously. And then it's going to project different levels for that rate. So it's going to say 0 rate, smaller rate, 0.1%, an eighth of a percent, et cetera, till a quarter percent on the change in the interest rate that the Fed might have. So this will give you a little table and give you a projection of where these futures might be if these occurrences happen, and then we give you a history of where things settled as well for the last few years. And it looks like we're a little bit lax in our 2015 history, so we'll get that taken care of for you guys. Then there is a 1 month LIBOR chart here, or table, so it's showing you where LIBOR is, and this is the contract that trades on the exchange. And then we have a link to treasury.gov, so you can see what the current yield curve looks like, and then you can compare it to different times in the future. So this is coming straight from treasury.gov right here. Okay, so these are extra things that are available in the interest rate products under the futures information to the related info section. Okay, and as you saw in the 10-year and the 30-year, there's another section with the cheapest to deliver baskets as well. All right, so let's move on. Check out contract summary. I believe we have some interesting stuff here. We do. So we added an extra sheet here. So we had a standard sheet, an OTC sheet, and some other places, but then we have a strike as yield sheet for the treasuries. And what this is doing is using that initial yield on the future contract and that initial dollar value of a basis point, we calculate the yields on the different strikes that are trading in each of the treasury products. So instead of just looking purely at strike, you can start to look at yield spreads as well. Now, these are, if the futures moves a lot, these might be off a little bit, and we're working on having a file that gets updated intraday, so we can do these updates a little bit more often, maybe every 15 to 30 minutes. But for all intents and purposes, this is going to be fairly accurate most of the time. Okay, so this is where you can get your yield for a given strike within the treasuries, and then this diff is just saying how much different it is from the yield in the future. Okay, so that's the other strike as yield sheet, and that's also available here. If we go look in the pricing sheets, it's a strike as yield under the advanced tab. So we put it in a couple places so it's easy for you to see and find. Okay. And then we don't have any secrets in pricing tools. We haven't gotten to the point where we're taking a look at the analysis tools just yet. And in the vol tools, we do have another page that's available in the interest rate products that doesn't show in some of the regular products. So we have vol by underlying, and what this is nice is it groups all the options together on and a placeholder with the future that option is tied to, right? So here we see there's some weeklies here. There's 3 weeklies here, and then you have the 2 serials. Here's the serial April, May, and then here's the calendar June, and here's the different weeklies. So this is a nice way. I always like coming here and looking so I could see where the short dated options that are tied to this same future as the calendar, where those values are. Okay, so most of the trade in the treasuries is right now in the front month, so you only see like one thing happening over here in September. But I especially like this in the Eurodollars, because it lets me see very easily how the serials are trading in comparison to the calendar month. Okay, and then we have the weeklies here are the thatched pattern as well. So that's vol tools under vol by underlying. Okay, so these are some of my my favorite charts are these vol by underlying, because it lets me get a good look at where you can call them gamma months are in relation to the vega months. So there's some interesting things going on in the Eurodollars where stuff's very bid because there's been a lot of activity in the underlying. So that is about it for our kind of secret interest rate product pages in here. Take a look around. I think that you'll find most of them very useful, because they're in there specifically because I've used them myself as part of my trading history, and I think you'll find them useful as well. So hope you enjoyed the video. If you have any questions, please feel free to reach us via the support form. Until then, we hope you come back and watch the next time. Talk to you later.